Well, hello, everyone. Welcome to the Money Compass podcast. You have come to the right place if you're looking for critical advice on ways to help guide your direction toward a healthy financial future. I'm your host, Christina Pullman with Penn State Extension. I'm an extension educator and I lead our statewide financial literacy efforts. And I'm very happy to be joined by my co host, Brady Ward. Brady, would you like to introduce yourself?
Yep, my name is Brady Ward, and I'm a junior majoring in finance and accounting at Penn State main campus.
Great. Thanks, Brady. Today, we will be discussing the powerful impact financial literacy has on shaping the lives of our youth. The research shows that early exposure to financial skills helps children prepare for a healthy financial future. Our hope today is that our listeners, especially those raising young children, come away with an understanding that instilling smart money habits from an early age lays the foundation for lasting financial confidence and adaptability, both essential for thriving in the real world. So we want you to sit back, relax, and enjoy as we share the best practices from experts in the field. We're fortunate to be joined by a team of folks from various backgrounds in working with youth and financial education. We have Julie Heaton, Hilary Hunt, and Jeanette Stackhouse on with us today. And I'll let each of you take a moment to introduce yourselves and tell us your role around youth and finances. Julie, we'll start with you.
Hi, I'm Julie Heaton. I am director of the Sockwell Miller Family Financial and Life Skills Center at Penn State. So I have the privilege of getting to work in financial literacy and financial well-being every day. And I get to work with fellow staff and collaborators across Penn State and the community. A lot of people on this call, and I get to work directly with Brady, who is one of our financial literacy ambassadors. So I'm really glad to be here. Talk about one of my favorite topics.
Excellent. Well, we're happy to have you. Thank you, Julie. We will have Hilary share next.
Hi, my name is Hilary Hunt, and I lead a cooperative effort between Penn State and the Pennsylvania Department of Education focused on financial education in K-12 schools across the Commonwealth.
Wonderful. We're happy to have you, Hilary. We're going to move to Jeanette.
Hi, my name is Jeanette, and I'm the Leadership and Civic Engagement Specialist for Pennsylvania 4-H, which is the youth development component of Penn State Extension. Within that programming area, personal development is one of the topics that I oversee. So when I learned about a new 4-H curriculum that focused in financial literacy, it was a perfect fit for my area to explore.
Great. Well, we are ready to get started. So I'm going to pass it over to Brady, who will take us through the interview segment with our guests.
Yes, thank you so much. And Jeanette, we're going to stick with you for the first question. How do financial skills benefit children, and why is financial literacy especially important for youth growing up in farm families?
Yeah, so I have a toddler. He just turned 3, so I know that teaching him how to spend money is really coming soon. Since he just had that birthday, he loved getting that money in the card and putting it in his own piggy bank. And so all of that is building up, even though he doesn't quite understand that concept of money management yet. But I can remember being in 3rd grade and my teacher was teaching us to write checks. She did that she would have a new item up on the board every day when we'd walk in, and we'd have to write a check. And if we filled it out correctly, we won that item. And 30 some years later, that still sticks with me. And I actually talked to her about this, and we reconnected recently. And I told her, like, that is one of the things I remember most from your class. And she was like, well, parents criticize me for teaching that skill so young. And I'm thinking, no, that was perfect for me to understand that concept of you need to exchange something to get something. And so that part of it is really important. And as I'm looking into my concept of the financial literacy and the new 4-H curriculum that we're working with, it introduces things like taxes. And as an adult, if I had learned that back in that elementary school, high school stage, maybe I'd actually understand them now as an adult. Since I learned how to write a check so young, maybe now I would actually grasp that concept. But for farm families, there's a lot of record keeping, and we see that in 4-H too with our livestock projects that we are probably most known for, is those young people are keeping track of how much all of those expenses are and coming up with a budget. So all of those are very important pieces to learn at a young age.
I really enjoyed that story and especially that personal experience. I'm going to turn to Hilary for this next question. What can we expect our children to learn about financial literacy in school and outside the home? What happens if they're not in public school as well?
Thanks, Brady, for that question. It's a great one. As Jeanette just mentioned, she started learning about personal finance in school with her teacher and the use of checks, which is a fantastic example, right? I'm at the other end of the spectrum with my own children. I happen to have a high school senior who is right now taking a course in personal finance at the high school, as well as a student in college who took it actually back when he was a freshman. What we know in Pennsylvania is that access to personal finance courses has been hit or miss over the past decades. Really, it really has depended what school district you live in, whether or not your child would have access to a personal finance course, or if that course would be an elective or a required course. Now, that is changing. In the 26-27 school year, we have new requirements from the state level that are going into place. One of those new requirements are a set of what we call academic standards, which is basically a document in each content area. We have academic standards for math and reading, writing, speaking, and listening, and what have you. Now we're going to have them in place for personal finance. That means that every public school is required to offer and provide instruction aligned to those new standards, starting as early as kindergarten. So we have standards for kindergarten to grade 2, grades 3 to 5, 6 to 8, and 9 to 12. Those new standards cover topics like spending and saving and insurance and credit, all at an age-appropriate level. Certainly, we're not talking about the intricacies of mortgages in kindergarten, but we are talking about what makes a good borrower. We're talking about the role that banks and communities play, or banks and credit unions play in our community. So those are some of the topics that we'll be seeing and starting to be introduced throughout students' careers in the K-12 system. The other important piece is that there was legislation that was passed called Act 35 of 2023 that requires all schools in Pennsylvania, not just public schools, but private and non-public schools, to require a mandatory personal finance course beginning with the 26-27 school year for high school students. Now, that is going to vary depending on the school, whether or not students are taking that, say, for example, as freshmen, sophomores, juniors, or seniors. So I encourage parents to reach out and find out what the plans are for that in your school, what is going to be expected of your student. But going forward, we will definitely be seeing much more personal finance education taking place here in Pennsylvania. And it is, by the way, part of a growing trend. Back before the pandemic, there were only 6 states that required personal finance. Now we're well over 25, almost to 30.
Wow, that's really interesting. And this podcast is really timely then as well. So, Julie, what's a good age to introduce money concepts to children? And what are some fun activities to help young children learn, such as maybe board games like Monopoly, books, or apps?
Really, there's no age that's too early to introduce a relevant concept. So I would say just looking for a teachable moment where something's really applicable to the child's life. And I think that's really important too, because a lot of times, when I talk to people about their money experiences and their personality trends and their social trends around spending, they'll bring up money stress or money taboos that were relevant in their childhood just as much as they'll bring up a positive experience like a teacher teaching a skill or a concept. So it's important to remember that you're also teaching them especially in the home, you're teaching kind of the emotional state around money. And even if money stress is a very real thing in your family, I'm not trying to say to avoid that concept, but that having conscious conversations about finances in addition to kind of the stressful things about it. So having sort of skills-based conversations when they come up. It's like a great example, Hilary mentioned not teaching mortgages when it's not really relevant yet. Like if a child gets their first payment from a grandparent in a birthday card, that's a great time to start talking about, what's your plan for spending this, and not kind of bringing in things from left field. And especially as folks get older, young adults being resistant to that kind of serious sit down conversation, but instead like, oh, you got a paycheck. Do you want me to like help you understand why some of that money didn't come to you? Like a lot of times that's a great way to like introduce the concept of tax. So
Thank you for that, Julie. And Hillary, I'm going to get a little more specific here. Is there a good age for children or teenagers to open their first bank account as they start earning income?
Thanks for asking that, Brady. One of the things to consider when you're looking at an age to open a first bank account is really what is allowable by your bank or your credit union. Some institutions will have specific rules around when a child can have access to different accounts. So in general, custodial accounts, in particular custodial savings accounts, can be opened from a very early age. And many institutions will incentivize children to come into a branch, say, for example, to make a deposit or to use their coin counter. And so there can be some great savings programs, youth savings programs associated with different institutions. So I encourage parents to check out what is available from their local bank or credit union. When it comes to checking accounts, there are often very specific ages associated with that, depending on the institution. So, for example, my own children were not able to open or have a checking account and a debit card until they turned 16 because of our financial institution. That is going to vary depending on where you bank. So those are the types of things that you want to have some conversations around. You may choose to use a different financial institution based on that, especially when it comes time to students receiving, say, for example, their first paycheck by direct deposit. So I think it's important, particularly for students, to start with that savings account and then transition to both the savings and the checking account with access to that debit card for them to get practice really in a safe and secure environment. I often equate it or compare it to driving a car, right? We don't just toss our kids the keys to the car and say, go out and have fun. We start them out with the rules of the road, some education and some training, and then we sit behind the wheel with them while they're in a parking lot, right? So we give them these opportunities to learn, have these experiences from an early age, and then put them to practice on their own.
Interesting. And I really like that analogy there. And Jeanette, I'm going to turn to you to get even more specific with farm families. So, as teens begin contributing to their family farm or earning their first paycheck for part-time work, what financial lessons will help them manage their money wisely?
I think realizing what is a want versus a need is really high up there in importance. It's so easy to have your own money and just want to buy all the things, right? So there isn't an activity in our Welcome to the Real World 4-H curriculum that helps young people identify what their spending goals are, such as putting away $20 a week to save up for that laptop that they want. How long is it going to take you to purchase a laptop based on how much you're putting away? So that really teaches the value of the dollar. And when I had my first high school job outside of our family farm, if I really wanted to do something, I figured out how many hours of work was it going to equal to get that item or that thing. And that is really how I based my decision on, was it worth it or was it not? And that was what determined, my time. When it comes to the family farm side of things, it's hard to say if they are contributing back to the family farm. there's a lot of things that go into that. Are they helping to contribute towards food costs or the bills? You know, what are the things that they need to prioritize depending on what the family farm situation is looking like?
Interesting. And I really like how you brought up your own personal experience there with seeing how much each dollar would equate to in time amount of work. And being a college student, I still use that strategy today. So, Julie, I'm going to turn to you here. What are some healthy ways that families can discuss the financial side of college with their high schoolers, including student loans, scholarships, and long-term financial planning?
Yeah, be paying for college is definitely a big expense for most families, and it's something that you really can't think about early enough. You know, thinking as soon as the child is born, you can open a 529 plan for them in the state of Pennsylvania. So, I mean, starting early, even before the child is aware of it. But then when it comes time to start talking with a high schooler or even middle schooler about college, I would keep those conversations in a goals-based spending area. So what I mean by that is like start with these more general questions of like, what do you want your future to look like? What are some things you want for your life? And thinking about college as an investment in order to achieve those specific goals, as opposed to just kind of the next thing that you're supposed to do. Um, and then as soon as you can, starting to lay out the financial investment that you'll have to make based on what your student is saying. So let's say your student immediately talks about, you know, the out of state school that they just love and they really want to attend because they like the sport team there, right? Like not shutting that down, but kind of starting to line up, oh, okay, well, you know, degrees are things we pay for often. So hopefully we can get you some scholarships. Let's start working towards that. But also like this option will cost around this amount. And here's some other options. Here's some in-state option. Here's maybe your student is not really sure. And so really this conversation before it gets into a kind of numbers space is more about helping them figure out what they want to do and what they're interested in learning and how they're interested in advancing themselves in their career. And maybe, you know, you can line up a bunch of different options next to each other. What does a trade school cost? What does a state school cost? What is an associate's degree like? And what's available to you? I think the earlier you can put, you're not going to get perfect sticker prices, but the earlier that you can put these sticker prices next to these ideas of different paths forward, the better. It often gets cut out of the conversation because I think it can seem demoralizing, but ultimately, I think it's actually the right move because then you're allowing them to be an informed consumer as early in the process. The worst thing you can do is apply to a school and get them excited about it without them having any concept of the financial means that you'd have to use to get there. And it might be that it's worth it, right? Some degrees are very expensive. I'll use the example of becoming like a lawyer or a doctor, very expensive degrees and high income, lifelong earning potential, higher incomes, and you know, payoff, that kind of thing. So having these numbers involved in the conversation will ultimately help your high schooler understand kind of these short-term decisions, long-term consequences.
So goal setting, and not only goal setting and looking at that long-term future, but also looking at trade-offs and different options in the face of the decision. So Julie, I'm going to stick with you here for this last question. Can you share financial management resources that are available to parents, caregivers, and professionals serving youth?
Yeah, I'm going to plug too that I know my fellow presenters won't probably plug maybe. So one, Next Gen Personal Finance is one that obviously none of us are supporting that program, but it is a stellar resource. Educators have free access to this, and they just have excellent high quality teaching materials. Then some things more close to home, the Sokolov Miller Family Financial and Life Skills Center has online self-study modules. These are, you can think of these as like Canvas or online courses that you can take for free. As long as you have a computer, you can access these courses and take one of 28 different topics around finances. So that's a good place to start. And then our YouTube channel is also another great place.
Thank you so much for sharing those resources. And Hilary, what resources do you have?
One of the ones that I really encourage parents to check out is what is available in terms of children's literature. There are a lot of great children's stories that focus on characters who are spending money or saving money. Your local library often is a fantastic resource. Many librarians can help direct you to books such as those. But one of my favorite resources actually comes from the Consumer Financial Protection Bureau. It's called the Money as You Grow bookshelf. And if you Google Money as You Grow bookshelf, you'll find a link to that on the CFPB website. They have parent reading guides to accompany many books. They also have some downloadable books of their own. So if it isn't easy to get to the library or don't want to pick out one of these books, they have a whole series called the Money Monsters, which are just a fantastic way to introduce young children to personal finance topics in a very approachable way through telling stories.
Thank you for those resources. And last but not least, Jeanette, what are some resources you want to share?
Yeah, so this year, Pennsylvania 4-H introduced the Welcome to the Real World curriculum. It was created by Illinois 4-H and Extension, and we've adopted it here. It's a great program that's available for 4-H members, but also in classroom settings. We've been putting an effort out there more recently for teachers to be able to utilize that curriculum and work with our extension educators on getting that out there.
Thank you so much. And I'm going to turn it back to Christina to end our podcast for today.
Great. Thank you so much, everyone. Thank you to our guests. That was a lot of great information that it's really inspired me to dig deeper with my own children, especially with 2 high schoolers that will be getting ready for the real world soon. So whether you're a parent, an educator, or a mentor, we hope that this has empowered you to take action, to have money conversations with your children, to utilize the resources in your schools and in your communities, and prioritize ways to help youth build the financial skills they need to thrive. So, in closing, we encourage you to check out Penn State Extension for articles, webinars, workshops, and on many different topics that support our families and communities. You can find us at extension.psu.edu. And Brady, can you share where they can find Penn State's Financial Literacy Center?
Yeah, you can find the Penn State Sokola Miller Family Financial and Life Skills Center at financialliteracy.psu.edu.
All right. Well, thank you so much, everyone. We really appreciate our guests. We thank you for listening. Please join us again for the next episode of The Money Compass.